You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. It is time once again for TWIFO, This Week in Futures Options, a program where we break down everything happening on the futures options side of the fence. So we'll talk some equities, of course, this week. Kind of hard to avoid that. Maybe some commodities, metals. You never know who's going to make it into the spotlight every week. That's why you have to tune in every week, 1:30 p.m. Central via the Mixlrs if you want to join us live or after the fact on pretty much every podcast platform on the planet out there. Remember, if you like what you hear, not just for this program, but for all the other shows we do throughout the week, make sure you keep those reviews coming in your platform of choice. There's a legion of new people discovering the options market every day out there in 2020. We want to make sure they have a reliable source of information on said market. So keep those reviews coming so new folks can continue to discover our content. Keep those questions coming too. We do love to hear from you guys. Let's see who we're going to hear from today. First off, I know who we're not going to hear from. Our usual compatriot and partner in crime, who did just join us earlier this week on our big election night special, the 4-hour extravaganza. Pleased to see so many of you out there joining us from pretty much all over the world. It was a fantastic special. My voice is still recovering from it out there. We're breaking it up into smaller pieces if you missed it, listeners. So that should be hitting the network as we speak. Pretty much half-hour chunks throughout the entire 4-hour extravaganza. Numerous special guests, people from all over the world joining us in the chat and everything else. It was great. So if you missed any part of it, stay tuned to the network. You will see it there. But of course, our buddy Mr. Smith from FTSE Russell, he joined us on the special. Can't join us this week, of course. He is out on assignment. Don't worry, though. We've got a slew of guests joining us. They're all going to have to squeeze in together because they're all going to share the CME Group hot seat. Going to squeeze 3 people into it today. Let's see how they fit. Let's start off with our old friend, Mr. Tim McCourt, the Managing Director and Head of Equity Products over there at CME Group. Tim, welcome back to TWIFO, sir. It has been too long.
Great. Yeah, thanks to be here. Thanks for having me. Looking forward to today's show.
Should be a fun one. And also joining us, make some room there, Tim. You got to squeeze over a little bit today. Because also joining us for the first time, Mr. Dan CARRIGAN, the Associate Vice President for North American Markets over there at NASDAQ. Dan, welcome to TWIFO and indeed to the Options Insider Radio Network.
Thanks, Mark. You know, it's always a sunny day in Philadelphia for options traders. And today, it's a sunny day.
How long have you been sitting on that one, sir? Well,
since 1790.
Yeah, there you go. Well, Dan, since this is your first time on the network, why don't you go ahead and give our audience a quick overview of your background in the option space, as well as what it is you do day to day over there at NASDAQ, sir?
Sure. I'm part of the North American Markets Group at NASDAQ, and that means we run all of the exchange properties. So the NASDAQ stock market, which I like to call the nation stock market, listing exchange for some of the most innovative companies in the market today that make up our NASDAQ 100 index. But then we also run 6 equity options exchanges. We also run a fixed income exchange for trading U.S. Treasuries. But I'm based here in Philadelphia at what's called NASDAQ PHLX. It's a equity options exchange trading floor, and it's also the successor to what was called the Philadelphia Stock Exchange, which my moniker of 1790, it relates back to the founding of trading in this country, April 5th, 1790. So we have a 230-year legacy of trading and innovation, and it's all centered on options. We handle roughly 35 to 40% of industry equity options volume every day. So its options are part of NASDAQ's DNA. So happy to be here today, Mark.
And I was asked specifically, he said, forget about you, Tim. I was asked specifically from Sean to pass along his regards to you, Dan, and said he hopes to see you on the show again soon. So there you go. I did my duty for God and country, sir.
The world loves Sean Smith. That's all I have to say.
He is a pretty fun guy most of the time out there. And also joining us, make room, we have another guest joining us on the CME Group hot seat today, Mr. Scott BAUER, the Chief Executive Officer over there at Prosper Trading Academy. Scott, welcome back to TWIFO, sir.
Thank you. So glad to be back with you.
Obviously, it's a bit of a hot and heavy week, mostly on the hot to the upside now, post-election. Really quickly, it's probably been a pretty turbulent week for you guys over there at Prosper, but what's been lighting up your tape? What have your clients been coming to you and asking for in this lead up to the election and now this post-election rally to the upside, sir?
Well, you know, the trades were mainly based around volatility, not just direction in the market in general, but volatility. And our take prior to the election and even now was that it was just a fantastic time to possibly sell volatility right before the election. Again, not having anything to do with market direction up or down, but just the anticipation of the election, the anticipation of how long it may drag on, almost like a little bit of a buy the rumor, sell the news type of event. So my clients and myself, we've been selling volatility across the board for the last week or so and looking to start covering a little bit of that.
Yeah, you and a lot of the market these days. We saw a pretty aggressive vol crush in the equity landscape. We'll get to all that and a lot more on the show here. But first, let's kick it off the way we always do with our movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, buckle up for this one, listeners. Welcome to the Movers and Shakers, a portion of the show we break down everything that's moving to the upside and usually to the downside on CME this week. I think since we started doing this on this show years ago, I cannot recall another time when the chart was as skewed as it is right now. Breaking down all of the major trading products over there on CME. Usually we clearly have enough for a top 5 and a bottom 5 usually in each direction. And this week, not so much. Pretty much the entirety of the chart is on the green with the exception of 2. So we have a bottom 2 this week for our dark side. Dan, this is usually where I ask one of our guests to choose which direction we should start in, to the upside or to the downside. I'm guessing you're probably going to lean upside today, Dan, because there's not a heck of a lot to parse on the downside, sir.
Mark, I love America. I always believe it's a bull market somewhere. Upside.
All right, let's do it. We're going to expand it a little bit today, listeners. Usually we do a top 5. We have to do a top 10 today because there is pretty much naught but green on the screen today. Number 10 over there at CME. Remember, these are pretty much straight up underlying movement since our last show. We're not talking changes in volume or volatility or skew or anything like that. Just straight up underlying movement here. Number 10, the NASDAQ 100 E-mini up about 6.4%. Number 9, the Russell 2000 E-mini up about 6.44%. Number 8, still staying in equity land, the S&P Mid-Cap 400 up 6.57%. Number 7, still staying in equity land, the Dow E-mini up 6.6%. Number 6, we jump over to soybean oil up about 7.25%. Then we get to our normal top 5 here. Number 5, our old friend WTI up 7.8%. It was number 2 in the other direction last week, listeners, off nearly 13.5%. So it's been a crazy week out there in WTI land. Number 4, RBOB up 7.81%. It was number 3 again in the other direction last week, off nearly 10%, 9.96%. So again, a crazy swing out there in equity land. Number 3, I think a product you may know a thing or two about, Mr. McCourt. That is Bitcoin, up 9.43%. It was number 15 in the upside direction last week, up about 0.25%. Number 2, palladium, getting out to metals land, up 9.44%. It was number 5 to the dark side last week, off about 7.25%. Number 1 with a bullet this week is lumber, up nearly 13%, 12.94%. And guys, before you ask us, we've done it before. Not a lot of options slinging over there in lumberland, so not a lot to parse. Since there's only 2 of them, I guess we might as well do the dark side as well. Rough rice off 1.12%, and nat gas, the only product that has the temerity to really be moving aggressively to the dark side this week, off 6.2%. That's it. Nothing else is red on the screen this week. That is complete insanity, listener. I can't remember the last time, if ever, that we've seen that. I think we'll tweet that chart out for you guys, too, so you guys can see it for yourself. So I guess we have to start to the upside, and that means we're going to talk a little bit of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities portion. We break down all the action over there on the equity side of the fence. Come into showtime. As you might imagine, there is some action out there in that side of the fence. So let's start off looking at the volatility of small caps, as we are wont to do, a.k.a. the RVX. Coming into showtime was at about a 32. That puts it down 8, almost 9 handles from where it was this time last week, about 887, and also well off the high of about 42 3/4 that it hit intra week there, about 10 handles off of that. So impressive downside, as Scott was alluding to, a little bit of vol coming in there. VIX come into showtime was at about a 2770. That puts it off about 8.5 handles from where it was this time last show. Our old friend VVIX, which is kind of the volatility of volatility in the large caps at least, down to about a 119, is 24 points below where it was this time last week. And our new friend, our newest addition to the volatility suite out there, VOLQ, at about a 29.25 coming into the start of the show. It puts it down almost 7 handles, about 6 3/4 handles from where it was this time last week. So in case you're wondering, those spreads, the VIX to small cap, VIX to RVX at about a 4.3, which is about 1/3 of a point tighter than last week. And even, let's do a little VIX and VOLQ. Why not? Not quite apples to apples, more like apples to tangerines, but still, you can still spread them. And about 1.5 points difference between those. So let's start there. Obviously, in VOLQ land, it is the newest addition to the volatility landscape. A lot of our listeners are probably wondering, what happened here? How did this joint initiative, this joint volatility product come to pass between CME and NASDAQ? So maybe, Tim, we'll start with you, and then maybe you want to hand it off to Dan, feel free. How did this ball get rolling, sir?
Yeah, it's a great question, Mark. And if you recall, CME and NASDAQ have had a multi-decade, long-standing partnership around the NASDAQ 100 and a few of the other NASDAQ index properties. And when we renewed our partnership a few years ago for the long term, we really wanted to come together and focus the collective efforts and the acumen of both organizations to bring new, exciting, and innovative risk management tools to the market. And one of the things we first started talking about a few years ago, end of 2018, beginning of 2019, was VOLQ. It was a relatively new index at NASDAQ at the time. And we've really worked with Dan and his team over there to make sure that the product is ready, the index is ready, validated with customers. And I think it's really just a great example of what CME and NASDAQ can do when we listen to the marketplace, when we listen to our customers. And given the backdrop of the last few years, the NASDAQ has become a very different index. It's a leading global equity index benchmark, but it has a different personality. It displays different characteristics than other indices, such as the S&P or the Russell families. And there's been an increasing need in the marketplace for different types of risk management around the NASDAQ or the story stocks that make up the NASDAQ itself. So it's been a great addition to the toolbox. And with that, I'd hand it over to Dan, who can tell you a little bit more about the specifics of the index and what he's been hearing from his side. But it's been a lot of fun. I think the first of many things to come out of this multi-decade great partnership with our friends over at NASDAQ.
Thanks, Tim. And Mark, we believe greatly in the value of our relationship between NASDAQ and CME, specifically because, as your show says, you're focused on options. We are all about providing new types of options, new types of contracts for both institutional and retail investors so they can achieve their portfolio return goals. I mean, as we've seen, this year has been a poster child for volatility. I like to call it 2020, the year of volatility. But when that term comes up, a lot of investors say, I get what you're saying, but it doesn't really resonate with me. So we thought it made a lot of sense to craft a volatility index that's probably more in line with what traders look at when assessing markets. Then here's an example. When traders in the old days on a trading floor might come back into the pit, or maybe they're now on a trading desk, they're coming back, or they're at home in the comfort of their home office. You start off the show, Mark, by talking about which products are up, which products are down, which ones are green or red. That's fine. But another piece of information helps with that investment picture, and that is simply asking the question, hey, where is the at-the-money volatility? And that very concept is the premise for the NASDAQ 100 Volatility Index, or ticker symbol VOLQ. But importantly, for futures on CME, it's ticker symbol VOLQ. It is a measure that only looks at the money options. And what does that do for the trader? It separates out the noise. You talked about looking at skew. There's no, skew, which is about a one standard deviation, put and call options out of the money. And there's no deep out of the money options that affect our index. It's always, if you're looking at the market right now on the screen, where's the NASDAQ 100? You can now answer the question, where is NASDAQ 100 volatility, which is a measure of implied 30-day movement. So definitely a new tool in the toolbox for traders.
And Scott, you mentioned you've been trading a lot of volatility out there of late. I'm curious, how does all this NASDAQ vol, how is this playing into what you guys are doing over there at Prosper? And what have you been up to out in the vol space? You mentioned selling it aggressively. How have you guys been going about that?
Yeah, so a couple things. The description that we just had and how this product is different, it couldn't be more spot on. And I'm talking from the trader standpoint right now, is when traders look at, where is vol and how are you pricing in the expected move of an asset class, whether it's a stock or a future, whatever it is, you price it in with at-the-money options. And given the option pricing models, and I'm not going to go into any funky math right now, but when you look at that at-the-money straddle, you're pricing in basically a one standard deviation range, 68% probability. So by using the at-the-money straddle, as the VOLQ options do, it really does kind of hone right in to the very most liquid options that there are, and really gives a fantastic opportunity to trade not those outliers, not the skew both above and below, but really what is at the money. So hopefully that makes sense. And again, that's to me one of the greatest things about this product is what it's using to determine its value, and that's the at the money options. And we have seen just over the last week or so, the VOLQ go from 30, I'm looking right here, almost 40, right? The high 30s down to where it's trading at 28 right now. And like I said, we've been aggressively selling volatility. Now, volatility equates to, in option world, premium. When volatility is higher, options get more expensive. When volatility is lower, options get less expensive. And there are, just like, you can do technical analysis on an individual stock or a futures market, support areas, resistance areas. You can do the same thing with volatility, because volatility is something that's called mean reverting, where it's always going to find its balance. It's always going to find that midpoint. So when volatility spiked, we've been selling that premium, and like I said earlier, we're starting to collect a little of that back. Again, not to get too technical on the math, but right now with VOLQ trading, I think we're let's call it 29 right now. The math behind that suggests that space is going to move by roughly 8%, 8.3% over the next 30 days. When vol was trading up at 40, just basically last week or so, that suggested a move in the NASDAQ space of almost 11.5% in just, a 30-day time. So you can see how vol absolutely directly correlates to the move in the marketplace. And again, for traders, two things. One is we always look at those at-the-money options. That's the first go-to. And then number two, you can look at this technically and or fundamentally as if it were another asset class looking for those support and resistance levels to trade off of.
It's interesting you brought that up, because that was going to be my next question for you, is kind of what attracted you to the VOLQ, Scott. Was it the fact that, NASDAQ, a very volatile index, we talk about it all the time in terms of these big tech names are really moving and shaking and rocking and rolling on just about any given day. They're usually leading the market to the upside and to the downside. So the fact that there finally is a volatility product on NASDAQ, which has kind of been an underserved volatility space for a while, was it that attracted you? Or was it kind of, as you just pointed out, the notion that VOLQ is really kind of a just the facts, ma'am, kind of volatility product? You're not incorporating the skew. You're not getting any sort of, what are the call wings doing? What is the put wing doing? It's straight up just at the money. Was it a combo of both of those? Or what was it that brought you over to the dark side there, Scott?
Definitely a combination, but the opportunity to trade this new volatility product that really, there's nothing like that out there for the NASDAQ space, made it so interesting. And then being able to incorporate, that shorter time frame, that 30-day forward-looking look here, based on options that are right at the money. Like you said, I'm not going to say it's plain vanilla, but it makes it so concentrated, so easy to focus and understand, and it's a great product.
Well, let's talk about that product a little bit, because you mentioned kind of it has been launched. It is still kind of in the early days. It's only been about a few weeks now, I think maybe closing in on a month here, that we've been live on VOLQ futures. But, walk us through how have those early days been in terms of volume and what you're seeing and what you're hearing from the clientele out there. Maybe Dan, we'll start with you.
I'd like to refer to Tim. I just want to front run Scott in terms of a catch up. Important for your listeners to note is that this is a great technical tool, because Scott brought up the great points. Hey, simple ideas in terms of at the money. But this is a product that is inversely correlated to the NASDAQ 100 index. So if you're a technical trader and you're looking at support and resistance lines, there's one thing you can count on. This index is negatively correlated about 80% of the time. So NDX is going up and NASDAQ 100, VOLQ is going down, and vice versa. And the reason why that's important before handing it off to Tim is, here's an example. Let's say you're a trader and you want to have a long-term bullish futures position. You're long the E-mini NASDAQ 100 futures, and that's your goal for the year. But along that way, you got a lot of volatility, a lot of sawtooth moves, like what we experienced back in March. VOLQ futures allow you to hedge out that volatility risk while maintaining these long positions. So it's a great complement. You want to get the returns from your equity futures position, but how about hedging them without having to exit those returns? So that's the setup, I think, for Tim in terms of the early days focus on this product. Tim, yours.
Yeah, thanks, Dan. And, we launched the VOLQ futures back on October 5th, and it's been going really well. Some of the new products always present unique challenges and great opportunities for the marketplace. The thing that's interesting is this is really, I think, a first of its kind product at CME. This is our volatility contract on an equity index, and we've been working with market participants to build a robust order book. We've seen great orders kind of coming in terms of efficient price discovery around all three futures contracts that we offer, because we offer 3 monthly contracts. So right now we offer the November, the December, and the January 21 contract. We've seen great pricing from customers. We've seen trades, which has also been great. It's been market makers buy customer paper, which is always great to see in a new product. We've had a few contracts carried into the October expiration, so we've already gone through one expiration without incident. Everything worked as designed. So a lot of these early days in volatility contracts are about building confidence, establishing the price structure, the term structure, increasing the efficiency of the book, having the operational plumbing worked out for everyone with respect to daily settlement and final settlement at maturity. So it's going really well. We're really pleased. We have a lot of work to do ahead of us in terms of increasing adoption and getting more participants into the contract. But this is what makes building markets a lot of fun. I've been at CME over 7.5 years now, and it's not every day you get a chance to build new markets. And that's really what I enjoy. It's what the team enjoys. So we enjoy working with NASDAQ and all of our other market participants and customers. So it's a lot of fun. But I think what's interesting to note, too, is just to kind of add some comments to what Scott and Dan were saying about what makes VOLQ unique. It really is the NASDAQ 100 itself. The NASDAQ 100 has been a tremendous tradable product the last few years, with the futures complex at CME almost up 100% over 2019, which was a previous record year for NASDAQ. So as more and more trading happens in the NASDAQ 100 complex, it's going to make VOLQ more and more attractive. I'd also like to point out, Mark, you were saying, when looking at something like VOLQ versus the VIX, it's not necessarily apples to apples. And I'd kind of say you're half right. It's really apples to apple, because what I mean by that is the Apple is worth kind of 2x in terms of its component weight in the NASDAQ versus the S&P. It's about 12% in the NASDAQ, a little over 6% in the S&P 500. So it's really important that people understand SPX and VIX is very different than NDX and VOLQ. They're different indices with different underlying constituent weights and different return profiles. I mean, the NASDAQ 100 index is, outperforming the S&P this year by almost 25% in terms of price performance to the upside. That's going to give you very different characteristics of volatility. So VIX is not necessarily good enough if you're trying to trade volatility around the NASDAQ 100 or any of those top component stocks that make up the NASDAQ 100.
Well, you kind of picked an auspicious or perhaps inauspicious time to launch a new volatility product, of course, leading right into an event that many people thought might be the biggest volatility event of the year, of course, the election. It is still playing out, obviously, out there in the broad markets. I'm curious, maybe, Tim, we'll start with you. Was there any maybe concern about launching a new vol product ahead of that? Just because, as you mentioned, it takes a while to get all, the I's dotted and T's crossed in a new product, get people used to what's going on out there to provide the liquidity, all that stuff. That could be sometimes challenging ahead of a big frenetic event, or maybe was it the opposite? Did you say, hey, this is going to be a big volatility event. We want to make sure we get VOLQ futures out the door ahead of it so people can start trading it. What was the viewpoint there?
That's a great question. I would say I think it's a little bit of both, right? I think it's always a little bit exciting and nerve-wracking to launch new products and kind of release them into the wild, so to speak, on their own and watch them grow up. But it really was, based on the feedback we have from customers, is that I think what we're seeing even play out right here is that, we're still waiting for the results of the U.S. election. I think in general, people are expecting there to be some volatility in the market, but I also think people are expecting it not to necessarily end this week. Either if we have a Remain administration in the White House or a change in administration, we're expecting the markets to react over the coming months as the new agendas get set for the next few years. And we think that's going to be an ongoing need of the marketplace to trade around that volatility. And now they have a tool through VOLQ futures, as Dan said, the ticker is VLQ at CME. They now have that new contract to manage that risk in the marketplace. So I think a little bit of both, but we certainly wanted this new tool in the toolbox before the election so people could get used to it and use it in the coming weeks and months. And as we all know, if you look back, volatility doesn't necessarily discriminate. If it's not here right now in the election that people want to trade, volatility will always come back at some point and always keeps us guessing. So it's not a tool just for the election. We think it's a great tool, again, suggested for complementary trading around the NASDAQ 100 your options portfolio, or even some of the other volatility products that you may be trading out there in the marketplace.
Dan, same question for you. Was the election a big consideration for you guys over there at NASDAQ when you're thinking about putting this product out? Or was there maybe some trepidation ahead of it? Or was it kind of the opposite? Was it, hey, this is going to be a big volatility event. We want to make sure this product is out there and available for people ahead of it so they can actually trade it during this big event?
We believe that in launching any product, the first three things that we should attend to are education, education, and education. And that was really our focus. But, Mark, when you launch new products, you can't time everything throughout the year, although obviously we had the election on the agenda. So we looked at it in the sense that there hasn't been a volatile month like what we experienced in March in years. So we felt consistent with the year, there would be no better time than to get this product exposed to the market so that traders can start to understand how it acts and reacts to market situations. So there's no better environment than being live and available for trading. It's what brings out traders to educate themselves, look at the markets, check with their broker. Do I have this symbol set up on my screen? Am I tracking it? That kind of thing. So we felt the best thing we could do for education is have this product launch during one of the biggest moments of the year with the U.S. Presidential and congressional elections. So it's all about real time and being real.
Speaking of real time, you guys can head on over there, cmegroup.com/TWIFO or /TWIO. Both of those places will give you the opportunity to generate the reports that we use throughout the show here, usually week after week on TWIFO. So just type in your product you want, pull the drop down, and you're off to the races, the volume, the volatility, the skew, all that good stuff. Of course, Dan and Tim, one of the things we won't find in that report yet, and I know I'm going to head off these questions now because I know we've already gotten some before the show, so I know we're going to get more when people listen to this. One of the things they won't find in that report is VOLQ because there are no options yet. The futures are kind of just out of the gate, but again, I know we're already getting these questions. So let's just head them off now. What is the time frame for when we can start maybe expecting the options out there? Dan or Tim, whoever wants to take it.
I'll start just to pass to Tim that for security style options, that is options that are in an SEC account, maybe you have a stock account, we're projecting that in the first half of 2021.
Yeah, great, Dan. We're super excited about that. There's always a little bit of an order of operations to these things. So first comes the futures, and then we're excited about the style from NASDAQ in the first half. And then for options on futures, we always like to let the ecosystem develop, something that we'll keep our eye on. But I think in general, a key focus of ours at CME and with the team at NASDAQ is that we want to build out that ecosystem. We want to make sure that for any real successful volatility offering, you need all facets to work: the futures, the cash options, futures options, structured products. We're really focused on building out the ecosystem over the next several months and years. But right now, our primary focus is getting the futures going strong because that's the first building block we have to have in place. And then next, as Dan said, will come the cash index options.
And Scott, what is your preferred vehicle over there at Prosper? Are you guys primarily fixated on the options side? You're using the futures, maybe the underlying stocks? Is it kind of a mix depending on the scenario? What is your preferred go-through methodology over there at Prosper, sir?
Yeah, it's primarily the use of options, but across all landscape. We do mix in futures and in stocks. But it's primarily options. So this tool being able to use, even a hedge against a basket of other positions, it's going to have, a beta correlation towards other stock positions potentially. I think it's tremendous. And again, I want to reiterate the point that was made earlier, which I didn't say, but was brought up. Volatility product like this, it is an inverse type of signal. So obviously the higher that this would be means, typically maybe there's a little bit more fear and usually the market's on a downswing and vice versa. That is really a correlation. But being able to have this as even just a hedge against other positions is going to be tremendous.
Well, like we said at the top of the show there, obviously it's been a tumultuous week. We saw a lot of action going on in the volatility space leading into the election. Now coming out of it, we saw the markets kind of last week having some topsy-turviness. And, of course, post-election night at least, it's been all straight up. You kind of mentioned you were selling some vol and looking to take that off now. If you want to walk our listeners through really quickly, kind of what you've been up to out there, Scott, and what trades you've had on in the vol space and the equity space, have at it, sir.
Sure. So in some of the ETFs that are out there, like in the triple Qs or in SPY, actually trading options there, the premium levels were so expensive. I mean, we saw volatility basically as high as it's been all year, with the exception of March, April. And they've been just incredibly expensive. And so we've been bringing that in and buying them back and just adjusting some of the directional positions that are out there. And then we also looked at some of the individual stocks last week, that especially towards the end of last week, that really, really got overextended from a technical standpoint to the downside, but volatility spiked upwards of 30, 40, 50% in those individual the implied volatility of some of those individual stocks. FedEx was one of them. Adobe was one of them, where we were just selling lots of premium, taking a little bit of a bullish position as well in those. But it's not like you can just look at the market in general and say, all right, I'm just going to sell volatility, right? You have to pick your spots. You always have to be risk defined, no matter whether it's in options or futures or equity, whatever it is. You always have to be risk defined. It always has to be calculated. But the thing about volatility is it is mean reverting. Volatility will always tend to come back to that midline. We just don't know the exact timing of that. And that's where, some of the nuances, obviously, in the experience of trading happens, and we don't always get it right. But the math behind volatility and volatility products does lend it to that. So it's been a very good trading environment. I'd say not just over the last couple of weeks, but really the entire year, with volatility levels, almost at levels that we haven't seen for a decade, for this extended period of time. So, if you're looking to trade directionally or non-directionally in the market, but trade the premium that's out there, it's been a great landscape for it.
Speaking of trading that premium, this is TWIFO. People do come to us to break down some of the options action over there on CME Group. Unfortunately, we'll have to wait a little bit to get the VOLQ options breakdown. But I think in honor of Dan and his appearance on the show today, let's go out to a segment of the market we don't get to touch on all the time in the equity space. Let's talk NASDAQ. In particular, the NASDAQ 100 E-mini coming into, as of a few minutes ago, we saw that index, that future at about a 12,099, just flirting with 12,100. Not quite there out there. By the way, if you're wondering how many contracts this puts up, about 63,000 on the tape so far this week. So a fairly active contract, all things considered, out there. The most active contract this week, though, was the DEES contract, which is ironic. Usually in the weeklies you see, or I should say in the equities, you see weeklies all day, all the time. That's where the action is. Right now, in the NASDAQ E-mini options out there, we're seeing pretty much about all DEES all the time. About 30% of the paper going up this week is coming in that DEES contract. Let's break down some of the vol we're seeing out there. The at-the-money vol, if you're wondering, we just talked about VOLQ out there, which is the at-the-money vol. This is going to be the at-the-money vol of DEES. So a little bit different beast out here, about 28.81. So not that far away. The VOLQ come into showtime was at about a 29.25. So pretty close here in terms of what you're looking at in the DEES at the money vol out here. And let's break it down really quickly in terms of skew. By the way, if you're wondering, that's off about 8 handles from where it was this time last week. In terms of the skew, looks like the puts are always going to be bid, but a little bit less bid this week. They were 16.2% rich to the at the money last week. This week, about 14.6%. So the puts coming in, again, not a huge surprise as we talked about vol coming in. The indices are rallying. People may be taking off some of those hedges they had going into the big election event. The calls, 11.4% cheap last week. This week, 14.6%. So the call is coming in pretty aggressively as well. Again, the vol is coming in pretty aggressively. So you're going to see both sides of that skew coming in pretty hard. In terms of what the most active contract is out here this week, it's the 12,000 calls. So again, not surprising. We're kind of breaking through that 12,000 even strike, threatening 12,100, ever so close to it. So that was the number one strike with a bullet out here, followed closely by the 12,200. So a lot of upside at play out here in NASDAQ this week. And then number three were the 10,000. Yes, you heard me correct. The DEES 10,000 puts. That's a strike that I wasn't expecting. And then we got to the 12,400s, number four, and then bring it up to Rios, like the 11,000 puts. So an interesting spectrum of liquidity going up out here in NASDAQ. Again, not a product we get to highlight all that often here on the program, but I'm glad we had a chance. Dan, you're my excuse to bring on some NASDAQ. We know we're talking about this kind of joint volatility venture here between CME and NASDAQ. Obviously, it's early days here, Dan and Tim, but I'm curious, is this perhaps maybe a bit of a peek behind the curtain, a peek behind the scenes of, can we expect more of these types of joint ventures, maybe in the volatility space, to come down the road? Maybe, I don't know, Dan or Tim, whoever wants to take it, have at it.
Yeah, sure. I think it's always a great question. Mark, you always keep us on our toes here on TWIFO, but I think, for volatility, we're certainly focused on VOLQ right now. But I think just another example, which we announced, not too long ago, with our partners at NASDAQ, we are also working on a bunch of other stuff in the index space where we have the NASDAQ Velas California Water Index future, which is going live on December 7th. So that's another great example outside of equities that we're working with our partners at NASDAQ to bring innovative new risk management tools to the market. So we got lots of things keeping us busy. We launched the micro options back in August on S&P and NASDAQ. So yeah, lots of great things that we recently brought into the market, and the water futures on the horizon. It's really been great to see us rolling out all these innovations with NASDAQ. But tough to say what's coming after that. But like always, Mark, we'll come up with something else. We always do.
Well, I'm looking forward to that. You kind of just touched on the micro options over there, also under your purview over there in equity land at CME. Tim, they've obviously been lighting it up this week. The futures as well. Any interesting nuggets you want to share with us on that front? Obviously, I'm sure they've been pretty active as a result of all the action this week, Tim.
Yeah, so I think what's interesting on the micros is if we actually start with the micro options, they're continuing to grow in volume, doing a fair amount of trading in those, and that's really exciting to see on the back of the success of the micro E-mini futures. But I think one interesting to note is when we look at the micro E-mini NASDAQ 100 future, we actually established a new overnight trading hour volume record the night of the election back on the 4th into the 5th, trading just under 550,000 contracts, which beats the old, not so old record from September of 540,000. So that was great to see. And it's too bad that Sean Smith is not here. But also, the night of the election, we had the record in the micro E-mini Russell 2000 future and the E-mini, its older sibling, the E-mini Russell 2000 future, with the E-mini future doing 76,000 plus and the micro Russell doing almost 90,000 plus the night of the election. So lots of records in the micros. And micro NASDAQ 100 futures continues to be a great product, and the market really loves that product. It's having a great year here in 2020.
Scott, that product's been kind of tearing it up of late. I've joked with Tim a number of times when he first announced it on this show way back a year and change ago. I didn't really think it would be the home run that it turned out to be. Now we, of course, have the options on them as well. Are these products that your clients over there at Prosper have been looking at? They're obviously very retail friendly in terms of size. Have you guys been trading these things?
So, yeah, they do look at these products all the time, and they do trade them because of, like you just said, they are extremely retail friendly because of the price point in them. So the fact that they're tied to the regular E-mini futures and at a fraction of the size gives the retail investor the ability to trade a 1 lot, a 10 lot, hedge against a regular E-mini future. The more products like this, the better it is for the retail environment for sure. The more liquidity it adds to the marketplace, the more option, no pun intended, that people have to really get into the marketplace at any size they want, and the more ability they have to hedge other positions, to look at something maybe ahead of an earnings type of event or an event risk, the election or Brexit or anything like that, to really get a sense for having a position in the marketplace based on a certain event. This product, for me, and this is nothing against, the guys from CME here, but to me, this product for the retail investor or the retail trader could be the best product they've launched in a long, long time. And there's great products out there. This one, it continues to gain traction, and my clients love it. That's for sure.
Yeah, well, the numbers don't lie, and folks are trading up these micros up a storm. The options also looking pretty active, too. Speaking of active, we've been pretty active on the show already. We're already starting to come up against it. I want to make sure we have some time for listener questions. But, Tim, we don't get you on the show very often. Before we rally into some other things, I have to touch on another product that is under your purview over there, which has been just blowing the doors off this week. Post-election, pre-election, it's Bitcoin. It's just on fire. Come into Showtime north of the 15,000 level out there, 15,250 it was coming into Showtime. I think it's given up some of that back now, about 15,100 or so, but still north of the 15,000 level. We just talked about 9,000 not too long ago out there in Bitcoin land. So a huge run out there in Bitcoin land. I'm looking at the options right here. I know it's like you had a pretty active week out here on the options front as well, Tim. So, Tim, I know you've been busy launching all these new vol products and watching the micros light up the tape, but obviously crypto doing pretty well out there as well. What's been lighting up your tape from a crypto perspective this week, sir?
Yeah, I mean, certainly both the Bitcoin options and the futures have been very active. Too uncommon that we see when we see some of these moves, like you said, Bitcoin going up to, 15,250 right now, like, a little over 15,100, kind of futures up almost 7.5% yesterday. They had a good move, they're moving a lot this week. It's just really been great to see not only the trading volume, but the open interest growth. There's been a lot of chatter about the institutional adoption of cryptocurrency and Bitcoin futures, and that certainly is what we've seen. But we see all types of market participants in our markets, in the futures and in the options. Open interest continues to grow, where we're just under 20,000 contracts of open interest in both the futures and options. And it's been a lot of fun to work on. It's really been exciting to see that when we have market-moving events here in the U.S. around, like, let's say the election this week, you're seeing both traditional and kind of non-traditional assets like Bitcoin be used at CME to manage risk. And it's been really a lot of excitement and interest and a lot of fun to watch this product continue to grow, continue to set new records at CME. And it's been a lot of fun to watch. I can't wait to see what 2021 and beyond brings for crypto.
I can't wait to see what you guys have in store for us on the listener questions front. Before we do that, we have time to squeeze in one more product. So really quickly, before we get to your questions, let's do a quick dive into another one of your favorite product complexes. Yep, it's time to talk energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment. You guys have been lighting up a lot of WTI of late coming into Showtime, like we mentioned. It's moving and shaking to the upside at about a 38.5. We've talked many times about how the options market has been fading. Any move north of 40, not quite there yet. Still at about 38.5, but still just an active week across the board. About 582,000 contracts on the tape coming into Showtime out there in options land. Scott, I know in your previous appearances, WTI and crude has been one you guys pay attention to a lot over there at Prosper, and that I know a lot of your clients trade out there. So what's been lighting up your tape out there in energy as we've seen this retreat away from 40 and now this resurgence back toward it again, sir?
Trading the range. And it has been, as you mentioned, such a clearly defined range for quite some time. 36 and a half, let's say, up to that 41, 42 range. And we have been trading that trend, and my clients have been trading that trend. Now, at some point, we are going to break out from there, one way or the other. But it is such a clearly defined channel, clearly defined trend that it's been incredibly tradable. In terms of trading on the option side, I know that my clients, as crude has rallied, they've been selling some call spreads. When it falls off, they'll sell some put spreads. And again, until it trades out of that range, which it will happen at some point, that's what they've been doing. But we always do everything, like I mentioned earlier, with spreads, where I'm not trading any naked options at all, especially in the commodity space. But I'm not trading any naked options at all. And so we always know what our defined risk is. going into any trade that we make. And so that's been that's been a consistent trade over the last, really 6 months or so, quite frankly.
Yeah, it's hard to argue with that. WTI has been very range-bound. Whenever it tends to break north of 40, you're right. You can usually reliably wager that it's not going to hang out there for very long. And the options market has faded any move of 40, or north of 40, I should say, for quite some time. Even in seemingly dramatic events in the past in the crude space, they still fade these rallies. Let's see what's going on out here today. Like we said, at about a 38.5 in that future out there. And the lion's share of the action once again, coming in the DEES contract here that has about 12 days to go. So it's within our usual frame of reference. I usually like to go a little bit beyond 2 weeks when I talk skew and vol and things like that. But we'll make an exception here because so much of the paper, 48% going up in this DEES contract. That vol out there, by the way, remember we talked it was north of 60 on our last show. So crude got just explosively volatile. You're talking more volatile than Bitcoin, more volatile than a lot of other assets out there in WTI. So you knew that probably was going to be a pretty short-lived, and it was. It's come off pretty aggressively this week. It's at about a 48.70 right now in that DEES contract. Puts it off nearly 20 points from a vol perspective. So pretty much it's been a vol apocalypse, Volmageddon out there in crude this week. In terms of skew-wise out there in DEES, the puts were leading the dance last week, 22, almost 23% rich. They had the money. So like we said, range-bound, fading that rally, and they were fading it hard last week. This week, those puts have come in, as you might expect, given the fact that the vol has come in aggressively. They're only about 17% rich to the at-the-money this week. And, of course, the calls, surprisingly, still kind of in line. 15.1% cheap last week, 15.5% cheap this week. Going out here to where the most active contract was this week, it was the 33 puts. That's a surprising strike, given the fact that we're threatening not quite 39, 38.5 or so coming into showtime. So not a strike closer to that, but actually the 33 puts were trading pretty actively all week. The big day was actually yesterday. 8,000 on the tape yesterday, about 6,700 on Monday, and the rest kind of scattered throughout the week. A lot of that opening, so a lot of opening paper on the 33 puts. Maybe going back to what Scott was talking about with trading this range. It starts to get a little bit north, maybe some folks loading up out there. Either way, a lot of action on that 33 put strike. Let's see really quickly what else was lighting it up out here this week. 42 calls, 4-2. Another interesting, perhaps unexpected strike. Actually, before I get to that, though, yeah, actually, no, it wasn't 42 calls with about 15, almost 16,000 of the lion's share coming on Monday, 6,200. A good chunk of that was actually closing out there. So maybe some folks deciding not going to make the 42 anytime soon, taking those off the table. Let's look really quickly to see if we see any other funky activity out here, some farther out, more optimistic strikes, shall we say, as we usually do out here in crude oil. Let's see. Going out to June of next year, the 60 calls, 6-0, trading about 5,200 contracts this week. That's a surprisingly and interesting strike out here, well outside that range we just talked about. So maybe a little bit of optimism by next June out here. A 5,000 lot going up, most of that opening out here this week, as well as 65 calls. So if 60 wasn't optimistic enough for you, 65 calls trading 6,500 times this week in DEES of 2021. Also looks like the 60 calls trading out there as well, so maybe a bit of a vertical out there. But either way, some farther off upside is the order of the day in the longer term WTI. Now let's see what the order of the day is for you guys, what you have in store for us. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your futures options feedback segment. Let's see how many of you we could squeeze in here in the time we have remaining. First up, Dan, this one sounds like it's up your alley. This comes from Bob Inotz. He wants to know, will we see a follow-up product from NASDAQ on the Nation Shares SKEWDEX product that will allow people to also have a volatility option to trade pure skew? Obviously, as you mentioned there, this VOLQ product is based around the Nation Shares / Nation Indexes methodology out there, which is just the facts, ma'am, just the at-the-money volatility of the NDX. But Nation Shares has other products that look at the skew, including, as he mentions here, the SKEWDEX products. So I'm curious, Dan, sounds like Bob is here as well. Have you looked at those? Any thoughts on doing something down that road in the future?
We have. Fortunately, we have a great relationship with Nations Indexes, the creator of the methodology that underlies VOLQ. And as we focus throughout your entire, beginning of the conversation, the value to VOLQ is really a measure of at-the-money volatility. But for those traders who want to have that opportunity for a mini crash insurance, something having to do with skew, there is an opportunity for us, and we're definitely focused on that. But it's down the road. Our goal is, as Tim said, we want to build out the ecosystem with VOLQ. Next, follow up with security-style options. Have that whole system for all kinds of traders who want to go between futures, securities options, back and forth, find arbitrage opportunities. That's where the real magic comes together in developing a new product.
There you go. We love the magic of new products. Since we have two, not just one, but two exchange reps here on the show, let's see if we can squeeze in this one from Baiju. He's a regular listener and question answer. He says, hi, Mark. Can you advise, how does assignment work from an exchange perspective? How do they decide who to assign, say, before expiry? If someone on a strike wants to exercise his or her buy, there can be many sellers on the same strike. So how does the exchange decide which seller to assign? My understanding is it's a random selection process. Is that correct? Well, a lot to unpack here. Maybe some stuff to correct in terms of what the role of the exchange is versus the clearer and others. So maybe since we have two exchange reps, I'll let you guys clear this up. Maybe, Tim, we'll start with you. Anything you want to add here for Baiju on the whole assignment process from an exchange perspective?
Yes, I think one thing to mention is in the equity index complex at CME, the only American-style options that we offer effectively are those that expire on the quarterly cycle, simultaneous with the future. Everything else is European in terms of equity. So presumably the early X question would only apply to those American options. And when those instructions for early exercise are provided to the clearinghouse, the assignment is random to the other, the opposite open interest holders in that same strike for that maturity. Random process exercised and assigned by the clearinghouse at CME.
And he mentions the clearinghouse. Dan, obviously you guys have a variety of different options over there. Maybe illuminate Baiju a little bit on the distinction between, let's say, a NASDAQ and the exchange versus OCC and what they do over there, sir.
In terms of the options products that we offer, single stock options and index options on the NASDAQ 100, it's aligned with what Tim had said. For our index options, they're European style. They're only exercised if they're in the money on expiration date. And with regard to his question of assignment, maybe you're talking about options on Apple stock, it's a random assignment, but that's handled by our clearing agent, the OCC, and not the exchange.
Well said there. Yeah, not really an exchange issue there, Mr. Baiju. Look to your clearers for how they handle all that random assignment, but it is the key issue is it is random. They're not looking at you and saying, here, you get them all. It is a random process. Unfortunately, that music means this program has come to an end. Man, an hour flies by when you're talking equities and volatility and all sorts of other fun stuff in the landscape of futures options. But before we go, let's go back around the horn. We'll start with you, Dan, as one of our first guests here, squeezing into the CME hot seat. First time we had 3 people squeeze into that seat. Hopefully it was comfortable. Not a big seat. But Dan, if folks are intrigued about all things VOLQ, they want to learn more, maybe kick the tires for themselves, where should they go? What should they do?
For the index, they can go to NASDAQ.com/VOLQ, see a lot of practitioner articles, trade talks, and a lot of collateral that will help them educate them on the index to get a sense of if it can help their portfolio management needs.
There you go. NASDAQ.com/VOLQ, the place to go. Tim, same question for you. If folks are intrigued, they want to learn more about VOLQ or maybe anything else you guys have cooking over there in the land of either CME equities or perhaps crypto, where should they go? What should they do, sir?
Yeah, the best space to go is CMEGroup.com. And then similar with Dan said, if you're interested in something like VOLQ, it's just CMEGroup.com/VOLQ, VOLQ. And same thing you can do /Bitcoin, /equity options. You see a pattern here. It's / whatever you're interested in for the vanity URLs. But CMEGroup.com is always a great place to start. And if you're also interested in some of our educational aspects, I would go to this, you search for the CME Institute or go to activtrader.cmegroup.com. Always great resources for everybody.
Well said. I'll also throw a plug in there myself for cmegroup.com/TWIFO or /TWIO, TWIO. Both of those work. Both of those will get you to the reports that we use throughout the show here every week on TWIFO. You can't beat the price. It's completely free. So if you're listening to this show, maybe after the fact, you want to check out, fluid milk at 3 a.m, you could do that. cmegroup.com/TWIFO or /TWIO, the place to go. And last but certainly not least, Scott, if folks are intrigued, I'm guessing a lot of them may have questions in the wake of what's been going on in the markets pre and post election, and they want to learn more about what you guys do. Where should they go? What should they do, Scott?
Absolutely. You can find us at prospertrading.com. And what we do is myself and a few other, we're talking veteran traders that have been on the trading floors for 20, 30 years. We are in a live room trading with our students. So not just trading, but it's really based on the education across all spaces. So we're live in there 8:30 and 3 o'clock Central every single day, prospertrading.com.
There you go. Check them out, prospertrading.com. And on behalf of Scott and Tim and Dan and indeed myself, and, of course, Mr. Smith, who couldn't be here, and everybody over there at FTSE Russell, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in so many great questions. Keep them coming. We'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. Then it all kicks off again on Monday, another episode of the Option Block all the way through to Thursday, and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.